Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is February 29th. I'm doing a review and outlook price analysis video for gold and silver. This is silver's price chart. This is actually the weekly chart. Let me move it to the daily chart real quick. This is silver's daily chart, and I'm also doing a video for, all in the same video, for gold. This is gold's daily chart. And to quickly review last week's video, in both price charts I didn't leave you with any chart patterns, any wedges, or any technical analysis lines besides the resistance and support lines, simply because we're dealing with the chaos of the coronavirus right now. I stated in last week's video that I expected gold and silver to continue to rise because of the issues with the coronavirus. Now, clearly, as you can see, that didn't happen in silver or gold. I'm sure you've been paying attention. A lot of a lot of traders, a lot of people that are in the market are just wondering, why is silver and gold moving the way it is? And it's quite honestly panic selling. I quite honestly did not expect to see the market react the way it did, especially since just 2 weeks ago it was hitting new market highs, and then literally an almost 72-hour difference from Friday, let me see here, let me take a look down here. From last Friday, I think Friday the 21st, we may have actually hit new highs. I know we were hitting new highs back here during this week, and then clearly this last week has just been the absolute opposite. I do have the S&P price chart here. So yeah, the S&P 500, I'm almost positive, was hitting new highs. So yeah, as you can clearly see, let me go out to the weekly chart on the S&P 500. Now, let me see here. This only goes back to 2004, but I mean, I've been in the market since early 2000s, and the S&P 500 it's been hitting new highs for every day or every week now for the last, since September of 2019. It's been constantly, we've barely even had just one pullback back in, just in January. I think that's when the coronavirus first came out. But prior to that, we were just on a constant tear up on the S&P 500, and I mean, we haven't seen a market like this since the dot-com bubble, as far as with the way that it's been moving up. But I'm not talking about the S&P 500. I'm talking about gold and silver. So let's get back to gold and silver. So gold's price here. Let's go to the daily chart. So we saw panic selling like we saw in 2008, and that's why we saw gold and silver, for that matter, fall in price the way it did. Silver is more of an industrial metal, so it's going to follow the stock market more so than gold. More than 50% of silver's market is industrial, so it's more volatile than gold. Now, I do want to go back to 2008 and just show you some similarities with what happened with the market in 2008 between the S&P 500 and silver. Now, this is silver's price chart. Just to go over it real quick for you. In March of 2008, silver was hitting new highs. It was hitting around 21. You can clearly see over here, the price was about $20, 21. It had tried to break above 21, couldn't do it, had a double top, came back down, and then it mostly moved sideways. Now, gold was different, but I know a lot of times when I switch to these markets, these price charts, it doesn't come back to 2008 like I wish it would. But clearly you can see this is 2008 right here. Gold was hitting close to $1,000. I think it did come close to $1,000. Gold hadn't seen that price since 1980, and same with silver. Silver hadn't seen $20 since 1980, and it was all in the news. But then we started to see gold come down. Now we didn't see panic selling in gold right off the bat. This is March of 2008. This is when in the S&P 500 in 2008 that we started to see the price come down. If we go to the S&P 500 real quick, I'm not going to switch too much between these charts, but in the S&P 500 you can see in March, let me see here, well this is July 2007, in March 2008, this is May 2008, so March it looks like it was hitting new lows, and gold was starting to come down a little bit, and clearly right here you can see the fall of 2008. This is the S&P 500, the daily chart. In 2008, in September 2008, the S&P 500 did its main crash. It came down over, let me see here, it was peaking out around 1300, and its initial fall it came down to 900. So at that time that was a pretty big price drop for the S&P 500. It didn't stop falling, coming down in price until March of 2009. Now that is completely different from what silver and gold did. Now silver right here, as I was telling you, silver was hitting price new highs at 21 back in, excuse the pop-up, 21 back in March of 2008. It had moved sideways, then it came down, and it didn't stop until October 2008 when we were seeing the just the beginnings in the market. Quite honestly, the market was getting out of silver and gold ahead of time. Now, this is different because everything's hitting all at once. But I really think that is because you can see, let me do a comparison right here with S&P 500. The silver, excuse me, the purple price line is the S&P 500. Silver is the price chart, clearly. Silver came down, found its low in October of 2008, October 29th. The S&P 500, or the stock market as a whole, did not find its bottom until March of 2009. So clearly, traders sold off silver and gold, got done with selling off silver and gold and getting into cash, but they didn't get back into the stock market. They started getting back into silver and gold well above before the stock market started to come back up. And the same is with gold. Gold, let me just quickly move back here. 2008, right here. Gold found its bottom in October of 2008, just like silver did. The S&P, same. Clearly, it didn't find its bottom till March. So, but the point is that traders did start getting back into silver and gold much more before the stock market. And I think the same will be true this time around as well. There was something else I wanted to go over, mostly for silver investors. And that is for the gold to silver ratio. The gold and silver ratio, I did create a page on my website of the gold and silver ratio. It goes into the history and also how to interpret it and other information. Generally speaking, anything above 80 is usually a buy signal for silver. It's been above 80, quite honestly, for quite a long time. Before, well, excuse me, since 2019, since September, it's been above 80, and prior to that, let me see here, it's been another year. It was in August of 2018, but it doesn't usually stay up that high, is my point. And I'm going to have to go to the weekly chart to show you that real quick. As you can see, we have some peaks here. These peaks are this one is, the price was 81 of the ratio. And this was back in 2003. This one in 2008, the ratio hit 82. This one right here in 2015, the ratio was 81. Now we're well above clearly above 80. We're at 95 right now. And if you remember back just a few months ago, we had a spike in the price of silver. So I want to compare and show you real quick the price of silver with the gold to silver ratio. So let me see here, get this in right. Okay, so the green line is the price of silver. The candlestick chart is the ratio. But if you remember, back in May of last year, we had an incredible price rise in the price of silver. Right here, you can see it. This is silver's price chart. At that time, in May, the ratio was hitting a high of, let me get rid of... Now I got to get rid of... Well, it was hitting a high of above 90. And traders came in and bought up silver and made the price move up higher, which now I am going to get rid of this just so you can see the price of the ratio. The ratio had gotten up to 92 back in May, and then the price dropped. But the ratio dropped. I've been getting my words mixed up. The ratio dropped, but the price of silver moved higher, and that's clearly what I expect to happen soon with the price of silver. Now, I think that silver and gold will quite honestly likely rise together, but I do expect silver. We may see an explosive move higher. I don't know when. I don't know when this is going to happen, but the ratio is way out of whack, and I wouldn't be surprised if we see some kind of very good rise out of silver. I'm not going to get more exuberant than that as far as the price rise we should see out of silver right now, because I don't know. With the way the market's moving, it's chaos right now, and you can't really predict chaos. So but the ratio is well overextended, and we should see a good price rise in the price of silver sometime in the future. So I'm not going to leave you with any predictions as far as what I expect out of gold and silver. I don't expect the markets to be as chaotic as they were last week, but then again, there could be a lot worse news come out next week. So I just hope that this coronavirus will end as soon as possible, and people will get better and stop getting it, and so on. So that's what I'm going to leave you with. The resistance level right now sitting above gold is 1670. It's literally sitting right around 1590. It's 1585, and then the other support levels, as you can see. But right now, support and resistance doesn't really help a whole lot because of the chaos in the market. So this is gold's price chart, and silver's price chart is right here. It did stop below 1650, and quite honestly, just to show you real quick, gold's still high positive for the year. It ended the year, where is it? Oh, I'm still on the weekly chart. I'm sorry. This is the daily chart here. Gold started the year off around 1570, 1575. It's at 1585 right now. So we're still positive for the year in gold. Not so much in silver, but for gold, we're still positive. But hopefully next week we'll be talking about higher prices in gold and silver. But hopefully the world isn't going into complete chaos for that to happen. But we'll have to see. We'll have to pay attention and quite honestly pray. So I thank you for your time. Take care, and God bless.